So I'm telling you, I may be wrong, but I don't think so. I'm sticking to my guns. Temporary oil shock or not, the post-war American economy is going to flourish. That's all there is to it. Let's bring in our economic ensemble, a fancy word. Taylor Riggs, co-host of The Big Money Show, right here on Fabulous Fox Biz. Jerry Willis, our fabulous Fox Business correspondent. John Carney, ace financial journalist. See, Jerry's on set here. That means it's a bad day. When it's a really good day, she goes over there against the wall and starts, reading stuff in 3 or 4 different colors. So we're glad to have her. It's okay,
Always.
We're like, what am I, a potted plant? Go ahead, Jerry. You only lost 5% something on the S&P during this war. So I'm just going to say big deal. To listen, read some of this stuff in all the major newspapers who think we're losing the war, you think there's a catastrophe going on. And the economy, even the GDP now, Atlanta Fed says 2% in the first quarter of the war quarter. I mean, how bad is this? It just isn't that bad.
It is not catastrophic. It's not even horrible. I mean, we see a lot of reason to be optimistic. In my view, we're going to have great earnings coming up here, double digit in the second quarter. I mean, everybody needs to just calm down and take a pill. I mean, we've got a lot to look forward to. And I am more worried about the debt in the private markets than I am about what's going on in Iran.
I think, Taylor, people, they need to look at the facts. It would help. There's a lot of gossip and a lot of speculation, okay, and a lot of opinion making. Okay, we're in the opinion making business to some extent. But the fact of the matter is, let's just take that. You've got forward earnings could be over $300 right now. That's strong. What did you say? 11% increase in the first quarter or the second quarter to the end of the year? Okay. The GDP now at 2%. That's not the worst thing I've ever seen. Okay. The productivity, the 4-quarter productivity for non-farm labor, 2.4%, 4 quarters. Okay. That's a big number. Big, beautiful, one big, beautiful bill. Tax cuts, deregulation, drill, baby, drill. That stuff didn't just evaporate.
No.
Okay, we're just not talking about it. But some people, last point, some people, including my pal Dan Clifton, Washington, very good Washington watcher. Anyway, the rebates and the refunds and the actual tax cuts for consumers in Q1 about offset the gasoline increase.
Yes. Okay, so that's spot on, where I don't want to be negative Nancy on the panel, but I'm thinking like, oh my gosh, but we just had big, beautiful bill. And all of these things to look forward to, the tax refunds, the no tax on tips, no tax on overtime. And then I'm like, oh, but unfortunately, all of that has now been wiped out and neutralized effectively by higher gas prices and some of the concerns about Iran. We had the great Steve Forbes on a program this morning, and he looked at me and he said, so what? He sounded like you. He said, we are changing the world. If this thing goes through the way we think it will be, you can suck up your higher gas prices for a couple weeks because we're going to deal with it, and you're going to get, oh, the S&P 500's crying, it's down 1%. Suck it up, who cares? So I'm with you. Look, I don't drive, so gas prices haven't impacted me. I know that there are many Americans out there who are struggling, who do not like diesel at 5, oil coming up at 4.
For a couple
it's temporary.
Of weeks.
Let's give it. But what I don't like, unfortunately, is all of the big, beautiful bill thing has now been neutralized by that. And I really wanted a big windfall.
Just a little cushion in the first quarter. That's all. A little cushion in the first quarter. Look, ultimately, a strong economy, John. Let's go. Look, if the factory construction continues, right? If the business investment in machinery and equipment and technology and so forth, if that continues, you're going to see higher incomes and higher wages. Now, at the moment, okay, wages are beating prices. That may not hold exactly through the quarter because of the oil shock. But the oil shock is not a forever oil shock, okay? I'm just saying the trends that were in place may be slightly interrupted. First of all, Europe would die for 2% GDP, right? They can't. Japan would die for 2%. In fact, almost everyone in the world, Iran would die, just period. But it's not so bad, okay? Those trends are not out the window.
I also think we're going to see a dramatic decline in oil prices once the Iran situation is resolved, which I think it will be by Easter. So you're looking at a really serious decline. I wouldn't be surprised if we're half of what the recent height was. So we were at $110 a barrel for oil. I think we could go down to $55 a barrel for oil once the Strait of Hormuz opens up, in part because you're seeing a lot of people were saying we're going to go to 180. It didn't happen because people know that this constraint is not a forever constraint. So it's not going to filter.
Haven't even gone to 150.
Right. So it's not.
I mean,
and
what kind of oil shock is this?
We're not going up.
It's a nothing burger.
Gasoline prices have gone up, but they are up by $1. They're not up that much. And I think those are going to come down too. Once you see those come down, people will start feeling better about the economy.
Right.
A lot better.
Jerry, are interest rates going up or down? Let's come back to the perennial Fed. And
not enough on mortgage rates, I'll tell you that
someone's
much.
got to free Kevin Warsh. We need to liberate.
Yes.
Hashtag free Kevin Warsh.
Yeah, I think you've got that right on. There has to be some kind of action coming out of the Fed. We're having to wait for that. And to quote Taylor to Taylor here, all right, you say this all the time, if I could. So the Strait of Hormuz, which is something we've been focusing on a lot, there is always a premium in gas prices, in oil prices, because there's always that potential for a bottleneck. We're always paying too much for oil because of it. If that could be entirely lifted,
but we don't buy
the
it.
entire world's economy
We
would
don't buy
rise.
it.
No, but what she's saying is
You're
if you
charging
take
me
out
for
the
stuff I'm not even buying.
if you take out the Iran premium and forever open up the Strait of Hormuz and have it controlled maybe
That's what
by
I was
the
trying to
U.S.
say,
or the Gulf
yes.
states, you've lowered oil prices because you've taken out the Iran premium.
Well, okay.
That's sort of the good news.
So how about this? So the president himself suggested yesterday he's going to run all that. The United States. And I don't recall who said it, but there's an escrow account in the Treasury where all that oil money, Iranian oil money, is going.
Okay.
Money from the high seas. It was, I think, probably Bruyette, former energy secretary. But I'm just saying the plan, and I wasn't even sure of this, the plan is the Treasury Department will keep the money in escrow now and in the future because the United States will be running the operation. Now, that will... I don't know what that would do for our prices. It'll certainly do a lot for our pocketbook. It'll do a lot to prevent crazy people from running Iran.
Right.
That's the way they've been running it. But you see what I'm saying?
I do.
That premium will be gone. Look, it's the Venezuelan model. The Venezuelan model, that's what they're doing. The United States is taking all that money from Venezuela and they're escrowing it. It's not going to Cuba, is it? Right? So Cuba is going to fold very soon. So this is very bullish. I'm just saying this is potentially
Do you want
very,
me to
very
bring
bullish.
up one tiny little hiccup?
I'm waiting for you to, someone's going to
Two-year yield
higher interest
jumped
rates.
9
Yes,
basis
there you go.
points.
Finally.
The 2-year was at a 3.94.
Worst auction in the history of auctions.
Steve Forbes said, oh, Taylor, so you want to chicken out because your 2-year hit 4%? Go cry me a river. He's right. I don't want to chicken out because my 2-year hit a 4% and Iran gets away with thinking that they won the war. But I get nervous when at 3.95 is the Fed funds rate is 3.50 to 3.75. So the market is trying to get the Fed to raise.
The market's out of its mind when
There we go.
planning on an interest rate hikes. This is definitely not going to happen.
That's what I want to know.
Yeah,
is the Fed going to actually, the next move going to be higher rates?
No, it's not going to be higher. This is totally out of control. The Fed will look through higher gasoline prices. They are not going to look at that as actually underlying inflation at all. They've learned that lesson. They've made that mistake many times. But Ben Bernanke practically wrote a book about this and said, you do not do that. So they will look through that. That may push up inflation numbers, but it will not push up the underlying inflation numbers. You'll get a technical, because gasoline is a part of the CPI, you'll get a technical lift in it, but the Fed will look past that. I think we are still on track for 2 cuts at least this year. I don't think that there's any chance of there being a hike unless the only way we get a hike is if the economy booms so much that those anti-growth fanatics at the Fed.
All those left-wing Trump derangement syndrome Phillips Curvers come out of the woodwork.
And then, but I think Kevin Warsh will put the kibosh on that, and we will not get
hashtag free Kevin Warsh, Jerry. When's it going to happen?
Yeah, I wish I knew.
Come on, we got to get him in here.
soon.
It's ASAP before the Phillips Curvers come back at us. Oh my God, prosperity is a terrible thing, Taylor.
never. Prosperity is not a terrible thing, but I get bummed out when Atlanta Fed GDP is at 2% when it was at 4 to 5.
So
but that's okay.
I have some good news on GDP. So you know how we had this bad, very quickly, bad fourth quarter. One of the drivers was lower usage of healthcare services because fewer people got sick at the end of last year. And that held down GDP. That also is what brought down productivity.
Be sure
because they're all getting paid.
Be sure and call Bobby Kennedy. He would love to hear this.
People were healthier at the end of last year.
Mom,
we
so
absolutely have to tell. I'll tell him. I'll get Laffer to tell him their pals. Jerry Willis, thank you. John Carney, Taylor Riggs, terrific stuff. Interest rates are going down, we hope. Anyway, remember you can catch Taylor on Big Money Show weekdays at noon right here on Fabulous Fox Business. Jerry comes around once in a while to say hello, and John Carney's fabulous. I'm Kudlow, up next.